What's going on, Justin? Welcome to the stream. Just gonna wait for a couple more people to come in. Here. We're gonna be chatting here. What's up, Actual Trash Plays? Lex is here. Brente Morris. What's up, Durham Dads? Pookie's here. Ravgab, what's going on? Be going live soon in a second, just letting everyone join. Welcome to the stream, everyone who's been here already. Alright, we got 45 people, we're good to go. What's up, Penny Boys and Gals? Welcome to the live stream. How's it going, everyone who is currently in the live stream? Looks like we got 45 viewers so far. Today we're going to be going over some trading strategies, such as portfolio diversification, among other things. We'll be going over all of that. But first, as always, we're going to be going over our homework from the previous night. We also have a little picture of some of our profits. One of our big winners, AIM, not the messenger. What's going on, Mr. J? We got Pookie in the house, Steven Ibanez, Fanny VSQZ, we got Matthew Schlabs, Brent's in the house, Actual Trash. Oh, Bodie's here. What's going on, Bodie? All right. So our first homework question from last night was, our brains react 2.5 times greater to loss than they do gains. And only one person answered this incorrectly. Everyone else got it right, and the answer is 2.5. There's a fill in the blank. We have, that's funny, Pookie's Revenge. Scrotus McDingle's in the house. What's going on? We got Scrotus McDingle. We also got Big Nuts 82. So we got both the fun names. Burmax here, Astronaut. Another one of our homework questions, and this was from Thursday night's Trading Psychology homework, is some people who have lost a loved one or a lot of loved ones or friends in the past start to develop a shell. They start to correlate having loved ones or having great friends to losing them. So they might shut off their feelings towards people in the future because they subliminally are afraid of losing them. How does this have anything to do with trading? Well, our first winner of a raffle ticket, and by the way, our raffle will be on Tuesday, which is tomorrow. So our first winner of the raffle ticket is going to be Scrotus McDingle, who is in the live chat. So shout out to Scrotus McDingle. And your answer is, if we shut down due to fear of losing, we only hurt ourselves and closing the door for opportunities of success. There is no life without death, just as there is no success without failures along the way. So good job, Scrotus McDingle. What up, my feathered homie? What's up, Kev Cave? What's going on, C Bolly? Got Google Home astronauts in the house. Our next question is going to be, this is also a multiple choice, and the question is, in 1979, there was a study done. People who had lost $7,500 were given the option to roll a pair of dice, where there were 75% odds of them losing $2,500 more on top of the $7,500 that they already lost, and a 25% chance of their initial $7,500 going to a zero. So that means that they had a loss and they could go right back to even. Most of them opted to take the chance and roll the dice, even though there was a 75% chance of them losing and only a 25% chance of them winning. And that's because they already were losing. They already were down $7,500 and they were willing to take the chance. And that's because we don't want to lose. Our brains just don't like us losing. We'd rather, like I said before, our brains react 2.5 times more or greater to loss than they do to gains. So what is this comparable to in trading? Well, 100% of our class answered correctly, and they said ignoring our stop losses. Our next question is going to be, this is another one for a raffle ticket, is what does it mean to try to will a stock price up? And Hammer Nick answered that correctly. He said taking your stop loss off because you believe the stock will eventually come back. So it's kind of being stubborn. It's like it's not using your plan. It's not using technicalities or fundamentals. You're just saying, "Ooh, I need the stock to go up. Like this stock has to go up. I'm already down so much. Like it's gonna go up. It has to go up." And you're trying to will it to go up. That's not how the stocks work. It doesn't just go up because you want it to or because you are hoping to or begging for it to go up. What's going on, Playlits? Welcome back to the chat. Welcome back to the live stream. Our next question for a raffle ticket is why shouldn't we be over trusting in an alert? And this is an alert I'm talking about as far as our Penny Boys stock alerts go, which you can find the link to our Facebook and our Discord in the bottom right hand of the screen, right underneath the catchphrase, #MakeSomeBread. So if you are not already in our premium Discord, or if you're not already in our free Discord, definitely check out our Discord at that link. And why shouldn't we be over trusting in any of the alerts? What's going on, Lauren? Best. The alerts aren't always correct. You want to do your own due diligence, and that is 100% correct. I mean, the alerts, I'm not going to lie, these alerts that we do have here at Penny Boys have a very high success rate. It's a proven success rate, but no one is correct 100% of the time. This is a stock market. You can't, if they were able to guess, or even if they're able to alert a stock at 100% of the time, it would be right. Well, then they wouldn't be doing this. They would be millionaires. They would be on their yachts. They wouldn't be giving us alerts. They wouldn't be spending their Sundays doing live streams for us. I know Austin did a 2-hour live stream today with a Fast Eddie. They wouldn't be doing this if they could guess every single stock. They'd be on a yacht. They would be in their private jet. They'd be on their own private island right now. So you don't want to over trust the alerts because they aren't always correct. You want to do your own due diligence. You want to know what you're getting into. And that was Salvador Girl, so congratulations, Salvador Girl, on getting that raffle ticket. Our next question, this is a multiple choice, and actually 100% of our class answered this one correctly. And the question is, how do we fix the fear of losing? And the answer is we can't. So we can only make a plan and learn to live with discomfort. If you have back pains, chances are you're not going to fix the back pains. You're going to learn to live with them. You might set a schedule of yoga to try to live with it. You might get some medicine, but you're not going to fix your back pain unless you get really, really, really lucky. But that's not how trading works. You can't fix the fear of losing. It's just in our head. This is how it's how our brains work. We're human. We're not robots. We're not aliens. The Isaiah yacht will be here any day. Yeah. I don't know about that JBLBS yacht though. That's more like a Titanic. But anyway, we have our next question. And only one person got this one wrong. So this is the last question. Our class did really well. Most people got 100%. We only had 2 people answer incorrectly. So this question is going to be, if you get into a trade and you don't know what to do when it starts to go up or down, you should. And the correct answer is not be in the trade in the first place. If you don't know why or what to do when an alert starts to go up or down, you shouldn't be in the trade. If you don't know why a stock will go up or a stock will go down, like if you're just in the stock because you're like, oh, it's alerted, I want to make money. That's not how you should be using these alerts. You should be using them as a guide, and you should be knowing what you're getting into. I'm getting my yacht from IKEA. That's going to take a while to build playlets with those instructions that they give you. So now onto our quiz, and this is actually going to be for a $25 discount. So whoever gets the highest score will be getting a $25 discount for their next month's premium membership. Matthew Slabs, that would take forever. Yeah, he's totally right. All right, so we had 1, 2, 3, 4, 5, 6 people get 100%, but we had a bonus question tiebreaker. So the person who got the bonus answer, the bonus question tiebreaker correct is going to be the one who gets that $25 discount. But special shout out and congratulations to the people who got 100%. And those people are going to be Pookie's Revenge, who is in the chat or in our live stream chat. So congratulations. Congratulations, Pookie's Revenge. Congratulations, Hammernick. Congratulations to Mike 2020, as well as Commander AJC, Salvador Girl, and Scrotus McDingle, who is also in the chat in the live stream. So congratulations to all of you. You did get 100%. Only one of you will be walking away with a $25 discount. Really quickly, we'll be going over the questions and the answers. The first question actually was one of the ones that was in our Thursday night homework I just went over, which was the 1975 study that was done about the $77,500 and all that. So same answer. It's refusing to set a stop loss or taking away your stop loss. I'm not going to read the whole thing all over again as we just went over it. The next one is, if you are good at video games, your personality type might be geared towards day trading or fast-moving swing trades, and this is because you might be and it's a fill-in-the-blank question. So yeah, whoever thought that Call of Duty might actually help you figure out what kind of trader you might be able to be. But the answer is going to be a fast thinker, as opposed to a vast thinker. A fast thinker, F-A-S-T, is able to see movement like fast. That's why it's called a fast thinker. Like in video games, you're able to, you're looking at the map, you're looking at the screen, you're talking to your, the people on your mic, you're yelling at someone, calling them their mom, this or that, or however, those video games work. A vast thinker, V-A-S-T, kind of sees more on the long game, the big picture, and they're a little more on the patient side. If you are an impatient trader, you might have trouble with, and the answer, and this is exclusively geared towards our Penny Boys stock alerts. Once again, link is in the bottom right-hand page or right-hand of the screen, discord.gg/btpenny. But if you are an impatient trader, and this is really good to know if you are in our premium alerts, you might have trouble with Lee's alerts. Lee's alerts are longer swing plays. They are the beaten down swing plays. They are the overreaction swing plays. They take time, and if you are an impatient trader, you're going to have trouble with his alerts. So it's good to know that, Lee's alerts take a while. I don't like sitting there for a while. I find myself to be impatient. I did my personality test, and I figured, maybe these long plays aren't for me. I'll get emotional. I'll make mistakes. So you want to know what you're getting into. If you don't like the cold weather, you might not move to Alaska. The same thing goes here. If you don't like long plays, you might not want to take all of Lee's plays. They just might not be for you. It doesn't mean that Alaska's not a good place to live. It doesn't mean that Lee's alerts aren't good. It's just not for you. And it's good to know that. The perfect trader, ... So fill in the blank, and the answer is doesn't exist. There's no such thing as a perfect trader. Trading is a stock market. Stocks go up, stocks go down. Sometimes they go up and down for the most random of reasons. There's no such thing as a perfect trader. A perfect trader would be a robot who can tell the future, or an alien who has superpowers. But we're none of those things until maybe this vaccine that's coming out might turn some of us into aliens, and we might be able to get some superpowers. But until that happens, we're not going to be perfect traders. So a perfect trader does not exist. And the real Popeye says, and my mom said video games wouldn't help me in life. That's hilarious. 25, 25, 50 is, and the answer for that is a buy-in method used to help us get the best average possible by getting into a play slowly and waiting until upward confirmation for our last buy. And I will be going over that in tomorrow's class in full, in exactly how to use that. The bonus question, and this is going to be determining who gets our $25 discount for their next month's resub. And the question is, what did you learn this week during the classes in your own words? And the winner of this said, I learned about cognitive traits. I was unaware about biographical variables. There is no shame in humility. You need to be self-aware and be your own police chief, which means don't trade with emotions. You could be pulling the trigger on that loaded gun and regret your actions later, which is true. It's a loaded gun, meaning like Weeble and Robinhood, you could lose $1,000 to $10,000 to $100,000 in the click of a button. What's going on, Salvador Girl? You actually won some raffle tickets earlier in one of your answers, so congratulations. Too much pride can hurt you. Let go of the past losses, but don't forget about them. Learn from them. Chat rooms are a good source of information, but take advice lightly. Do your own research, as well as know when to put it down and walk away. Sometimes people just talk or post to hear themselves, which is definitely true. Whether it be to talk shit, or out of spite, or just to get a reaction out of others. Being careful or fearful is very important to know the difference. Don't trade off of fear or out of revenge. How we react to loss is 2 times greater than winning. Do not trust or do not overtrust an alert. Every alert will not be a guaranteed 100% gainer. And this is just an unrealistic expectation. If you jump right in just because they put out an alert, you're probably following blindly and will most likely not turn out so well. So that is going to be Scrotus McDingle. So Scrotus McDingle, you got that $25 discount. So congratulations. And congratulations to everyone else who got that 100%. And we will be doing these quizzes at the end of every week where you can win some nice discounts. So definitely pay attention, because we will be doing one at the end of this week, going over some of the stuff that we're going over tonight. Speaking of which, tonight. So tonight's class is going to be about risk management. So, what is risk management? Well, simply put, risk management is managing your risk. So in the stock market, that means figuring out how much money you are willing to risk losing and what reward or profit you want as your goal. This can be for each trade or just in general, for instance, your week, long, month long, or even year long goals. We're going to be focusing on 3 different ways of working on your personal risk management. And these 3 topics, well, they're going to be portfolio diversification, it's a tongue twister, risk versus reward in your trading plan, having a spreadsheet, and note-taking. So, first up is going to be portfolio diversification. So, as far as portfolio diversification is concerned, now understanding portfolio diversification is actually somewhat simple. However, being able to implement it into your trading plan, well, that's where it gets difficult. It's easy to have a plan on paper, or in theory, it's easy to have a plan on paper, but then when you actually try to trade with that plan, there can be a lot of variables that can hold you back. One big one is your emotions. You can check out my videos on trading psychology and emotional trading, and I'm going to put the link in the description after the stream is over. So what is diversification? Well, it's a process of finding variety. So in trading, for instance, this means having a variety of stocks and different types of stocks. Why do we do this? Well, if you look on the screen, you want to think about streaming services. I know a lot of you probably use a lot of those streaming services on the screen, whether it be Disney Plus, Netflix, Hulu. I personally love Hulu and Netflix. I tried Disney Plus just for that, The Mandalorian. Most of us have Netflix, but we also have Hulu and Amazon Prime and maybe even Disney Plus. Now, why is that? Why do we have 4 different services, or 5 or 6? Well, if there's nothing to watch on Netflix, we still have Amazon Prime, Hulu, and Disney Plus to browse for a show or movie to watch. If you only had Netflix, then there's nothing to watch on Netflix, or stopped working for a day, well, you'd be out of luck. That's why we diversify our streaming services. With stocks, it's somewhat similar. If you have, let's say, 5 stocks and one of them goes down, well, you still have 4 other stocks to keep your portfolio afloat. If you only had 1 stock and that 1 stock went down, well, then your whole portfolio would be going down and you'd be out of luck. So there are many ways of diversifying your portfolio. some of which are going to be sector diversification, diversifying the amount of stocks you are in, and diversifying the style of trading that you're in, whether it be penny stocks, blue chips, ETFs, or maybe swing trades, day trades, options, so on and so forth. Okay, so there are 11 main sectors in the stock market. So we're going to be going over sector diversification first. Does anyone know at least 5 of them in the live stream chat? I'll be giving a raffle ticket out to anyone who can name 5 sectors in the stock market. The peaky fucking blinders. I just watched TV through my neighbor's window. That's not creepy at all, Lex. I still used to be at bunny ear antennas with aluminum foil. That's hilarious. Mandalorian was fire. You are totally right. Can you do diversification with only long-term stocks? You can, yeah. We'll be going over how that kind of works. Oil. Close. Come on, let's get 5. Whoever can name 5 of them will get a raffle ticket. Someone said energy. Put a little cheat screen on the screen there. I'll do one of these one as well. 1, 2, 3, 4. Tech, energy, transportation, entertainment, food, technology, healthcare, consumer goods. All right. Actual trash. I'm going to go ahead and give you those tickets. I'm going to write your name down here so I don't forget. It's Actual Trash Plays from our premium Discord. So our 11 main sectors in the stock market are going to be energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials, information technology, telecommunication services, utilities, and, as Christine C. said, real estate. So on the screen you see a heat map. And we'll be going over that in detail in a little bit. So why is it important to know these sectors and to diversify them in your portfolio? Well, let's say that you get into 5 different stocks without knowing what sector they are in before getting into them, which is not a great idea. You're just blindly getting into a stock at that point. You're not doing your due diligence. Well, there's a chance that you might be investing in 5 stocks that are all in the same sector. Now, let's say that the sector of those 5 stocks is utilities. Now, look in the bottom right-hand screen, right above the Make Some Bread graphic. Look at utilities. What do you guys see? You see a bunch of red, right? Well, today utilities isn't doing so well, or it didn't do so well. So your whole portfolio would be red because you're heavily invested in one sector, and that sector is red. Now, if you had 5 stocks and they were in 5 different sectors, then only one of your stocks would be in utilities, and only one of your stocks would be red, while the others might be green. You might have healthcare, which looks like it's doing well, or a financial stock. You could have an energy stock. You'd be diversifying. One way of seeing how the different sectors are doing is by looking at a heat map, like the one on the screen. And you can find one of these on the homepage of finviz.com, and that's a free site, so that's finviz.com. And this will show you how each of the sectors are doing and the stocks within them. You can also go on your Webull app and check out the Best Performing Industries section. And I went over how to find all this in detail in my Webull overview video, as well as what the different sectors are and how they work in my prior portfolio diversification videos, which I'll also leave links to them in the description once this stream is over. So those are the different types of groups in the heat map. So what you can also do is if you go to the groups section in, once again, FinViz, you'll be able to see this page right here. So, back to diversifying. The reason that we diversify sectors is to protect your portfolio. Meaning that if one sector isn't doing well, our portfolio as a whole can still stay afloat. Another way of seeing how the different sectors are doing is checking out the Groups tab in FinViz, which is once again a free site, and which I also went over in my FinViz overview video, which I'll also leave a link for in the description of this video. The Groups tab will show you what sectors are doing well for the day, week, month, or even year. This way, if your stock isn't doing well, you can see if it's just your stock or if it's the whole sector, because you don't want to get emotional if every single stock in your sector isn't doing well. That just means that your stock or your alert maybe is just going along with the sector. It might bounce back. Although it's good to scroll down and see how the whole sector is doing for the week or the month, and you might want to maybe gauge that on whether or not you want to set a tighter stop loss or not. So, if we were heavy in one sector and that sector starts to not do well, our entire portfolio would also start to not do well. So it's good to know which sectors are doing well for certain time periods so that you know which sectors you might want to not only have one, you want to know which sectors you might want to only have a stock in, but also you want to know, what maybe kind of a few of them. If you like, for instance, technology, maybe you'll have 3 stocks in technology. It's been doing well for the week. It's probably been doing well for the month. As opposed to if you have like a real estate stock, you might only want to put 1 stock in real estate or 1 stock in utilities because it hasn't been doing as well for the day. Although real estate, it looks like it has been doing well for the week. So it's good to know the different time periods. We also have, if you go into, once again, FinViz and you type in XSPA, for instance, and search it, one way of seeing what sector your stock is in FinViz. So if you search a stock, it will tell you which sector it is in. So if you look in the bottom of the screen, you see that XSPA is in consumer, I can't read it from here, consumer cyclical. So you can also check out on your Webull app by going to the About section, where it will tell you what type of sector the stock you're looking up is. And that's how I usually look up the stock, is I'll go into Webull, I'll go to About, and it'll tell you what kind of stock it is. It's important to know what you're getting into, just in general, but especially so you don't go heavy into one sector. If you get into 5 out of 5, if you get into 5 out of 5 stocks of one sector, it's basically the same thing as going all in on one stock. And that leads me to my next point. Diversifying as far as the amount of stocks you go in is concerned. So I don't know if anyone here plays poker. But when you go all in on poker, you're risking everything you have. If you lose, you're done playing, and the same goes for the stock market. If you go all in, you lose, and your portfolio is going to be taking a huge hit. That's why we diversify. When it comes to the amount of stocks we get in, we base it off of percentages. Some investors, now there's a difference between when people say investors and traders, those are 2 different things. Investors are long-term investors, traders are, what we usually do here in Penny Boys is trading, is the short-term, trade, penny stocks. So some investors say that you should only put 3% of your entire portfolio into one play. Some say to do no more than 5 to 7%. Some traders even say anywhere between 10 to 25% for smaller accounts is all right. Well, there's no right answer. There's a safe answer and there's a risky answer, but no one's right. Because everyone trades differently, everyone has different emotions. No one can tell you how to trade. They can just tell you how they trade. And maybe, it worked for them, but maybe it won't work for you. This is how life works. This is how humans work. We're all different. It looks like the underground poker game. I've been to it in Speakeasy. Brimneck says it's hilarious. So this is called concentration versus diversification. Some people think that concentrating on a few stocks is the way to go, while others say that only the top analysts are able to do this profitably. Some people say that diversifying 3% of your portfolio is the way to go, where some say that you'll be spreading yourself too thin if you do that and not allowing yourself to get enough return per stock. Overall, it's up to you how much you decide to diversify. But it's important to know what you're going to be doing before starting a trade, or before getting into a stock, or before even starting in the stock market. So don't let anyone tell you what to do. You do what you want to do, but you want to know what you're going to do before you do it and before you start. You don't want to be halfway into trading and be like, oh, I'm going to start put 10% or 5% or this percent. You want to know what you're doing before you start trading and before you even get into a stock. At Penny Boys, we recommend around 5 to 7% for new traders. This is a less risky option, and when you're new, the less risk is a safer way to play. Your choice, however, will be based off of your own risk management and your emotions and just how you are as a trader. Speaking of risk, another way of diversifying is by diversifying the types of plays you are in, whether it be options, swings, day trades, blue chips, penny stocks, ETFs. Now, options in day trading is very, 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 very risky. Let me repeat that. It's very, 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 very risky, especially option trading. You can lose your whole account that way. Once you become a seasoned trader, you'll be able to use options, ETFs, and day trades to supplement or diversify your trading plan. But in the meantime, you might want to open a long account and put some blue chips or some less volatile stocks in there. That way you can let those sit while you trade with your swing account. Or even within your swing account, you can diversify the types of trades you get into between the longer beaten down swings and the ones that currently have a good volume or a catalyst or earnings coming up. And we went over how in the Penny Boys Premium Alert Service, once again, links in the bottom right hand of the screen, we went over how in the Penny Boys Premium Alert Service, Lee usually alerts the longer swings, and Austin will alert the shorter ones. So it's good to diversify as far as that goes, so you're not in all long swings sitting on your hands, getting bored, getting emotional, or in all quick swings, struggling to keep up with everything that's going on if you work a 9 to 5 or can't watch the stock market 24/7. So, risk versus reward is going to be our next topic that we're going to be talking about. There's our expa again. So, risk versus reward. Diversifying is how you help take away some of the risk with investing. But how you do it depends on your own risk versus reward plan and tolerance. One way of planning this out is by having a risk to reward ratio. So what does that mean, risk to reward ratio? Well, as you see on the screen, that is an example of a risk to reward ratio. Yes, the Mo Jockey, if you don't have, I don't either personally. I actually am planning on getting into mostly Austin's plays because I don't now I'm able to watch the stock market. I don't want to be sitting around for weeks to a month at a time because me personally, I might get emotional. I'm a very quick thinker. I like things to happen. Instant gratification. I try to work on it, but we are who we are, and I'm gonna, knowing who I am, I'm gonna trade accordingly. Stocks go up, but they also go down. Not all the stocks you're going to get into are going to be winners. You're going to lose money on some of them. You are going to. Once you realize this and once you accept this, you will start to be a more successful trader. So I want to repeat that. You're going to lose money on some of your plays, even the alerts. And once you realize this and accept this, you're going to be a more successful trader. I can't stress that enough. The goal is not to win on every play. The goal is to grow your account. So, one way you can do this is by developing a risk to reward ratio plan for your trades, or just for your portfolio. What this means is setting a personal target or a percentage that you will take profit and a percentage target that you're okay with losing at. So, let's say that you're using a 1-to-1 ratio, which is in the middle of the screen. This means that you're looking for, let's say, a 10% profit on each play and risking a 10% stop loss. In order to make money overall, you're going to have more wins than losses on more than 50% of your plays. You're going to have to get wins on. This is assuming that you're trading with your plan and using the same amount of money per trade and only setting your stop loss once you're 100% in of your intended position. So this means that in order to do this risk to reward ratio, you're going to have to trade your plan, which means that you're going to have to diversify your portfolio with a certain percentage each play. And you're going to have to set a stop loss and a percentage, like where you want to take profit, and you're going to have to follow that. So if you were in 10 trades and you won 5 of them, and you lost 5 of them, well, then you're even because you have your stop loss at 10% and your profit at 10%. If you win 6 out of 10 trades, well, you're up now. If you win 7 out of 10 trades, you're up still. Your portfolio is up now. Now, if you have a 2-to-1 risk to reward ratio, this means that you are willing to risk, let's say, a 10% stop loss and take profit when you see 5% profit per trade. This means your risk is twice as much as your reward. You would have to win on 67% of your trades that you make in order to grow your portfolio. Now, if your risk to reward ratio is 1-to-2, this means the opposite. You're willing to risk, for example, a 5% stop loss and take profit at 10% of each play. With this trading plan, though, you will only need to win on over 33% of your trades to make money. On the extreme side of things, if you have a 1-to-5 risk to reward ratio, this means that you're going to have, for example, a 5% stop loss, and you're looking to take profit when the stock hits 25% on each play. This means you'd only have to win on 17% of your plays to break even. And if you win on more than 17% of your plays, well, then you're going to be growing your account. Whereas if your ratio was 5 to 1, which is the opposite, you would have a 25% stop loss and take profit when you see 5%. But that means you'll need to win on 83% of the trades in order to just break even. So basically the math is 1 to 1 is 50%, and then it just goes, so 2 to 1 would be 67%, 3 to 1 is 75%. It's just basically how, like if you have 10 trades and you have a 2 to 1 risk to reward ratio, you're going to need to get 67%, so around 7 trades you had to have profit on. Whereas if you have the 1 to 2 ratio, you have to have at least more than 3 trades that you end up winning on, which is getting to your profit as opposed to your stop loss. But the percentages right there, that's how it works right there. So like they don't change. So if it really depends on how many plays you think you can win on. So I'm not going to tell you which plan to use. That's up to you. But now you know how the risk to reward ratio works and what the math is, and you know how right there you can take a screenshot of that if you want, or I can post it in the chat later in our Discord, in the premium Discord. The best way to trade is by using a plan, not just randomly getting into plays and hoping for the best. And you want to follow your plan. So try it out, see if it works, preferably while paper trading, so that you're not risking your hard-earned money. So maybe try 20 trades or 10 trades or 30 trades with a 2 to 1 ratio and see if you can get quick gains, 67%. At least you have to get at least 67% of your plays. So around 7 out of 10 plays. You have to get at least 7 out of 10 plays. You're going to have to get to that profit of, let's say it's if it's 2 to 1, let's say it's 5% profit or 10% profit, whatever your profit is. Whereas your risk would be double that. So like I was saying before, the 2 to 1 risk ratio is like, let's say a 10% stop loss and profit at 5%. So every time that your stock goes to 5%, once you're 100% in, you take profit. 5% take profit. 5% take profit. If it hits 10%, you're out no matter what. You keep doing that as long as you get 67 or around 7 to 10 stocks correct. Well, then you're going to be winning. You're going to be making money. You're going to be, your portfolio will be growing. On the other hand, if you're doing a 1 to 2 ratio, it's the opposite. You're going to have let's say a 5% stop loss, and you'll take profit every time you see 10%. So you might stop out more often, but as long as you get 3 out of 10 or 4 out of 10 plays correct, then you're going to be growing your account. But if you're just trading randomly, then there's no way you're not going to know anything. You're just going to be trading randomly. You're just going to be hoping that it will work out, but you won't know why or what or how. At least this way, if you try 20 times, you can see, all right. For instance, like maybe Austin's alerts, they tend to not hit the stop losses often. So with Austin's alerts, maybe I'm better off taking a 2 to 1 ratio. Or if you do like a 10 to 1 ratio, that means that you need to win on 90% of your plays. So if you have 100 plays, you need to win on 90 of them in order to just break even. If you have a 1 to 10 ratio, you can lose. If you have 100 plays, or let's say you have 10 plays, you can lose on 9 of them. As long as you win 1 of them with that ratio, you'll be breaking even, because that 1 that you win, you have your stop loss set at 10 times that. So it really depends on your own risk to reward, and it also depends on what works for you. And the best way of doing that is practice and trial and error. I mean, that's why people go to the batting cage to test out their swing. It's practice. They're not just going to go into the game without doing batting practice. You're not going to go into a fight without sparring first. You're not going to play soccer without practicing first. It's all about practice, and practicing usually is best done with paper trading. That's why a lot of people do paper trading. You can even paper trade while you're while you're trading with your real money as well, if that's what you want to do. But paper trading is a great tool to have, especially when you're trying to figure out your plan, especially if you're new to trading and you don't have a plan and you want to figure out a plan. The best way to do it is trial and error, and the best way to do that is through paper trading, because you're not losing your hard-earned money. And remember, don't trade with money that you can't afford to lose. It's like when you go to a casino. You don't go there with your life savings. If you if you go out to the bar, you're not going to go out with your last $50 that you have to your name. You're probably going to stay home, because you only have $50 to your name. You don't buy a new TV if you can't afford it. If you can't afford to trade, then wait. Paper trade. Use the time to learn. There's nothing wrong with that. This isn't a get-rich-quick scam or some kind of scheme. This isn't a put your last $100 into the market and hope that it'll double or triple so that you can pay your rent. It takes time to learn. It takes trial and error, and if you can't afford that, then just wait. Don't trade with your hard-earned money if you can't afford it. But if you can afford to trade, the best way to do it is to have a plan. And the first step is having a psychological plan, knowing your emotions, knowing how they affect you, and all the stuff that we went over in last week's classes. The next step is knowing what your diversification plan is going to be. What percent of your portfolio are you going to put into each play? What sectors are you going to be getting into, and how many? What types of plays do you plan on doing, whether it be swing or longer swings? And what is your risk to reward ratio? What's it going to be? Then you have that plan, you write it all down, and you stick to that plan, and you follow that plan. And you take notes, and you keep a spreadsheet, and you find out what does work and what doesn't work, and you write everything down. First, you write down your plan, and this is actually going to be part of our homework, by the way, for our new members program, premium members. And then when you get into a play, you keep track of that play. You write down the entry, you write down your targets, you write down your stop loss percentage, you write down when you exited, once you exit the play, whether it be for a profit or loss. You write down how you were feeling that day, when you got into the play and when you exited the play, and even like when you were adding to the play. And you want to write down what your emotion, as far as what your emotions go. You want to write down what you could have done differently. Maybe you shouldn't have been trading that day. Maybe something happened. Maybe you weren't police chiefing yourself. You were in a bad mood and you were trading emotionally, and because of that you got in too fast and you stopped out. So now next time maybe I won't do that. Maybe because you don't want to stop out. Because if you stop out, well then you're taking a loss, and that goes against your portfolio ratio. And now you had to win more plays going forward, only because you decided to trade emotionally or you decided to trade tired. You want to write down what you could have done differently and what you did right. That way you know to do that next time. You want to keep track of your trades and learn from them. Study them. Study your past self. And try to become better than who you were last week or last month or last year. The only trader that you are trading against is not the people in the chat. It's not the people in StockWits. It's not anyone who has a similar account to you. It doesn't matter, that Joey or Jimmy or Bob or Jim, are making $500 a week or this or that or blah 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 blah. A lot of them are lying anyway. They don't. A lot of them aren't saying that they have 3 accounts and only one of them is profitable. So who cares what other people are doing? The only thing that matters is what you did a week ago or a month ago or a year ago, and you want to get better. That's the only person you're trading against. So keep a spreadsheet. Take notes. It's very, 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 very important. So this is what we're going to be going over as far as to this week. We also have next week on there as well. And then in week 3 and 4 is going to be some other great trading strategies. Tomorrow we'll be going over how to buy and sell a stock with limit orders, stop losses, trailing stop losses, stop limit orders, and OTO orders. And those are great, and and the different pros and cons for people who work a 9-to-5 or don't work a 9-to-5, and are able to trade pre-market or who aren't able to trade pre-market. We're going to be going over all that stuff and the pros and cons of each, but most importantly, how to do them. And then Wednesday, we'll be going over our buy-in method, which is the Penny Boys Premium Alert Service. We call them the 25-25-50 rule. And I'll be explaining exactly how that works and its different variations, and how you should be trying to implement that into your trading plan. These are all parts of the plan, and once we learn to put this all together, as well as the stuff we went over last week, the trading psychology, that's part of your plan. That's like the pre-plan. That's just knowing who you are. And once, like I said, once you learn to put this all together with what we learned from last week's classes and from the future classes, then hopefully we all can become better traders. That's the goal. And as the weeks go on, we'll be going over even more advanced trading techniques and tricks and tips. So the hope is that over time we'll be able to all #make some bread. So that is our week 1, day 1 trading psychology class. I'm sorry, trading strategies class. Last week was trading psychology. I'm just going to be going over some questions. I had a little section in our Discord, questions for the class, just to see what people wanted me to just answer at the end of class. How much experience does one need before starting options? And that's from Yad. Honestly, Shoot, like some people spend like 3 months to a year waiting. Honestly, I would just practice. If you haven't gotten the stocks down yet, then take your time. Figure out your plan, figure out all that first, and then maybe get into options because options is super, 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 super risky. You can lose everything. You probably saw that Robinhood, the thing with Robinhood and that poor guy. But that's how options are. It's not something that you want to be getting into if you don't already, if you don't already have your emotions in check with just swing plays. So you want to learn. You want to learn the basics first. You want to learn how to walk before you learn how to run. You want to learn how to crawl before you learn how to walk. So we got Playlits. Shout out to Playlits. He says, I often find myself with the opportunity to make small profits on plays, like $10 to $30, before seeing it drop to where I'm losing $50 to $100 on the same play. It's mostly greed, as we would like to see an even larger gain, but how can we stop ourselves from doing this to ensure taking consistent small profits over chancing big losses to big gain scenarios? Honestly, the best way of doing that is to have a plan. If you have your risk to reward ratio, you say, all right, I need, my risk to reward ratio to be 2 to 1, or 1 to 2, or 3 to 1, or 1 to 3. Don't break it. Just, if the play doesn't work out, the play doesn't work out. Losing is part of the game, and it's how you learn, what plan works best for you. And as long as they say that with beginning traders that you shouldn't be trading. You should only be trading off your plan. You shouldn't be trying to analyze every stock. You shouldn't be trying to trade. To switch up your plan during the trade. Just have your plan. This is the percentage that I'm going to take profit. This is the percentage that I'm going to take my stop loss. And once you start messing it all up, that's when you start losing. That's when once you break your plan, that's when you start losing. You want to focus on the percentages and not the dollars, like Master said. Just 10% gains will add up. You get if your goal is to get 20% gains, those will really add up. You get a bunch of 10% gains. You get a bunch of singles, a bunch of doubles, a couple of triples here and there. And that's how you make money. It's not by going for that home run every single time because we're not on steroids. We're not home run hitters. Steroids are banned now. So we have hated. So no, that was something about. We have, let's see, DJ traders. There are watch lists or alert lists for their class. On Sundays we will be doing the watch list streams. What that means is that we'll be going over some of the plays that are currently, or some of the alerts that are currently in play or close to entry, and we'll be doing some due diligence on them, seeing A, if they already hit target, or B, if someone, if Lee or Austin already exited it. Because if that's the case, we just just throw it right out. We don't want you to touch it. We want you to look at it. But if it's something they're still in, and it's near entry, then we'll do some more due diligence on it. And we'll see if it's something that we can, maybe wait, because some of these plays take a week or so. So maybe we'll see if it's a play that has volume or has a catalyst coming up, has earnings coming up, and we'll put that in our daily watch list or our watch list for the week. And if it's not, then we might leave it in our weekly watch list, which is something that we might go back to next week and see if the volume's picked up or a catalyst is happening. And that's going to be for premium new members, program members only. Actually creating a trading plan, maybe examples. Yeah, so yeah, and this is all this is about trading plans. This is all about creating a trading plan. Like you don't want to go into trading without knowing what you're doing, knowing why you're doing it. And you might lose. You might lose, your plan might not work out for the first month, 2 months, 3. They say 90% or like 86 or 87, I forget the exact math, it keeps changing, but it's around 80 to 90% of new traders lose on their first 3 months, and not just lose, they lose everything. Like they tank their whole account. So, it's just part of the game. Like, not if you're starting out bike riding, you're gonna fall over a couple times. If it's your first day playing soccer, you're probably not gonna be like the leading scorer on the team. You're gonna get knocked down. You just gotta learn how to get back up. Ravgav says, what are your thoughts on having 2 accounts, one for long plays and one for shorter plays? I think I'm doing this to counter the emotional trade issue. That's actually a very, very, very good plan. And that's the thing. If you have 2 accounts, it might be easier. You might be able to say, my plan is I want to put let's just say $1,000 into long plays, and I want to put $2,000 into short plays. So you'll have your short account, preferably with Webull, because Webull does let you trade pre-market and after hours. So if you're doing shorter plays, you want to be able to trade during the whole market. So you want to maybe have a Webull account with your short plays and have a plan for that. Maybe your ratio, your risk to reward ratio for your short plays will be different than your long ones. Maybe your long ones you'll have a bigger stop loss because they're long plays. So maybe you'll have a 1-to-3 ratio or a 3-to-1 ratio on one, and the other one will be the opposite. If you have two accounts, you can definitely plan out a little better what you're going to be doing as far as the different ratios that you want to do. Because long plays and swing plays are different. You don't want to play them the same way, or you might not want to play them the same way. You can have 4 accounts if you want. I mean, I don't know exactly why. I mean, for me personally, I personally do a long account in Robinhood. I would do a Webull account, because you can have 2 Webull accounts. You can do a margin and a cash. So you can have your margin account for your swing plays, and you can even have a cash account if you want to dabble in day trading. Maybe put like $50 in there just to practice, or like $20 or whatever. Don't go crazy. You don't be putting your life savings into it, or just paper trade. Have a paper trading account. That could be your third account, and that's where you can practice, day trades and options, because it's a lot easier to lose money if it's not real money. If you're playing Monopoly, and you lose Monopoly, it's a lot, it's a lot less of a crappy feeling than if you're playing real life and you lose, all your savings and all your money. I'm going to open it up to questions from the actual live stream, and while we do that, I'll be asking some questions to the live stream for raffle tickets. Remember, we are doing our raffle, our grand prize raffle tomorrow, and also our weekly raffle. So I'll be drawing some names for the weekly raffle, and we'll draw some names from that weekly raffle to get put into the grand prize raffle, and that will also be happening tomorrow. Yeah, cash account is something that we will be going over in full as well, because it is a good way to get around the PTT rule, but they do have limitations as well. Yeah, no way I can handle more than 2 accounts. So I have a job, and that's the thing. One person might have 4 accounts, and it might work for them. But if it doesn't work for you, then you don't have to do it. Don't do what someone else tells you to do. Do what works for you. And like Pookie said, there are advantages and drawbacks to each strategy. How do you set a swap between 2 Webull accounts? That's a good question. I've actually never even thought about that. I think that, like you're saying, well, so you can turn your margin account into a cash account or vice versa. And you can just go into, I think it's like under your settings to change to a cash. It takes like 5 days though, or something like that, 3 to 5 days. The first question is going to be, what sector is, let's see, what's a fun one? What sector is, I'm going to look up a stock, a random stock. EVFM, let's do EVFM. What sector is that in? That'll be for a raffle ticket. Remember, we went over, you can find that in either Webull in the profile section, or you can find it in the FinViz. If you just click in the stock and search it, you'll be able to find out what sector EVFM is. Under account, there's a button with a cash account, and to split your account in halves or thirds. So the cash account, what I would do is I would split it in thirds. Let's just say you have $300 in your cash account. You trade with $100 the first day, and then $200 the second day. I'm sorry, $100 the first day, $100 the second day, $100 the third day. By the time day 4 comes around, now your $100 have cleared. And you just rinse and repeat, and hopefully eventually you turn that $300 into $3,000, and then you're trading with $1,000 per day. So lad 08, I believe is the numbers, but I do know your username, Lauren Best. Got that healthcare. How about my favorite stock? What stock is my favorite stock? What sector is Isaiah in? Isaiah's actually been pushing today. It's been doing it's like almost it's getting to that $2 range that we're all hoping for. Isaiah. Let's see. Who got Isaiah? I just looked it up as well. I'll let you all respond while I sip on my NutriBullet. Got to stay healthy, remember. You don't want to trade without the right nutrition or without the right sleep. Your brain doesn't work. If your brain doesn't work, you're not going to be able to master 42. You're not going to be able to trade the right way. Just like when your mom told you to get some sleep and eat right the night before a test or a quiz. Same thing works with trading. Let's see. All right, who can name the? Who can name? Let's do 7 sectors. Who can name 7 sectors? I know we did 5 last time. Where do I have them written down? There it is. 7 sectors. I know Playlist was asking me to make a video of how I make these NutriBullet shakes, which I will do for you guys if that's something that you want me to do. I'm obsessed with these things. I love it. I've been cutting some weight, doing a little bit of dieting, working out, and all that, and this just changed my life. This NutriBullet, I'm telling you, and it's so easy. It takes like 5 minutes, depending on if you want to use fresh fruit or frozen fruit. But I can show you how I do both. Get some flaxseed in there, some almond butter. 1, 2, 3, 4, 5, 6, 7. Pookie's Revenge, quick as always with the answers. Who can tell me how the raffle works? That'll be for 3 raffle tickets. The best explanation of our Penny Boys raffle. Which is in our premium alert service. Does anyone know what the grand prize was of, this will be for 1 raffle ticket. What was the grand prize of last month's grand prize raffle? Vitamix for life. Samoa Jockey. Or as far as entering goes. The raffle. Crypto. Cannabis, I love it. Apparel. Banking. 11 sectors, as everyone does know, is energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials, information technology, telecommunications services, utilities, and real estate. Raffles. Raffle enters your tickets into the wheel of names. You get a prize, and then you can choose to do options, etc. But how do you enter the raffle? And why do we do it? Post a Discord. Yep. Clint Parker, what is your Discord name? Hopefully some one-on-one help playing it. Grand prize was a bullet. A NutriBullet? That'd be hilarious. I would love that, like a Penny Boys NutriBullet. Post profits on Facebook and other pages. I'm going to give Nick some raffle tickets as well. Nick 2086. Answer question is post profits. Post on Facebook and other pages to receive raffle tickets. So basically, you can. This is just, posting. You gain raffle tickets for things like the grand prize last month. So Kev Cave. Last month, the grand prize, Kev Cave is correct. The grand prize last month was $100. It was a Visa gift card. And it's just for posting on social media, whether it be, Weeble comments, Stock Twist, it could be any Facebook page, it could be your own Facebook page, it can even be our Discord, free Discord. It's just posting, how you feel about Penny Boys. It could be, it could be an honest opinion, it could be anything. And you just post your screenshot into the Penny Boys raffle, and our hopes is that it gets us to grow our community. And the bigger our community gets, the more traders we can help and we can do these classes for, and the more we can grow and make right now we're working on a lot of great stuff like spreadsheets, bots that will automatically let you know when an alert runs a certain percentage. and in our raffles we gave out a $100 Amazon gift card last time. We also give out and the prizes are based on how many raffle tickets there are. So the more people who enter, the bigger the prizes. But yes, like some of our prizes are one-on-one help, like by Austin or by Lee. One last prize was the winner was allowed to, well, not allowed to. The winner was won a alert breakdown, so he was able to ask for any alert that he chose, and Lee broke it down for him exactly why he got into it. He broke it down the chart and the whole 9 yards for him in private chat. We gave away Austin's screener settings, which are huge. It's how he finds his stocks, like his FinViz settings, or his actual scanner settings as well as his screener settings, which he spent like months on. So it's like a huge, huge, huge prize. I personally want to. I wish I could win that because I'd be using that all the time, honestly. We gave away Penny Boys merch, which is in the works. I got another question. This is more of a funny question. What would be your Penny Boys merch of choice? If you could pick any type of Penny Boys merch that that would be created or whatever, what would you like it to be? And funniest answer, I guess, would be, or no, funniest to best answer will get some raffle tickets. Pray for platelets. Duck set gang. I think so. I think it'd be funny to have those Skyrim memes like the Sneak 100 and this 100, something regarding that with Penny Boys would be funny. A Penny Boys mask, Brad 81. I'm gonna write your name down, get you some tickets. As long as your Discord, I think, is Brad 81. Bumper stickers, a beak mask, Pookie's Revenge. I guess you some tickets. Sure, this says pray for platelets. A duckling shirt. I'm gonna get Lad some tickets. Tidy Whities. Is that Brimac? European cut speedo. What, the duck hat? A stress ball. Samoa Jockey. What's your Discord? That's hilarious for all these plays. That's great. Nutribullet with an apple on it. Top hat pillowcases so I can dream about winning. Penny Boys dollars. Oh, dollars? Dollies. X-Sung Hero. Again, it gets used. Oh, what's up, X-Sung Hero? Seeing you around chat. Apple caffeine. Really tall socks. Duck stress squeeze ball to relieve stress and avoid emotional trading. Oh, I almost remember. What's your Discord again? Beat his ass. Fake cash with Austin's pick on it. I want to put that bill on a t-shirt. That's what's it? Clippers. Big Quench body pillow. Big Quench water bottles. Bodie. Oh yeah, I keep forgetting it's Bodie. What's up, Bodie? Bodie's an OG of the new members program. Juco. I should have known that. What's up, Juco? Another great member. Penny Boy stress ball would actually be really funny, I'm not gonna lie. Model boats. That's great. Model boats. Kev Cave. Gets you some more raffle tickets. Little Penny Boys model yachts. Pookie's Revenge has that right in the Isaiah punching bag. Maybe a GLBS one as well, huh? But yeah, so yeah, definitely what I'm stressing as far as tonight's class goes is creating a plan is key, and it doesn't happen overnight. It takes a bunch of different, it takes knowing your trading psychology, like your own emotions, and doing figuring out what your emotions are as a trader. It's figuring out what you want to do as far as how much you want to put into each play. Maybe what sectors you want to get into. Maybe what you want your trading ratio to be. And then another big one is how you want to do your buy-ins, whether you want to be risky or conservative. Conservative being like a 10% buy-in to start, and then a 10%, and then 10% like every day or every 2 days. Take care, Brumac. But yeah, we're gonna be going over the 25, 25, 50 on Wednesday, which is the next big step as far as the plan goes. All this is all that we're doing is creating a plan, is in steps, because it doesn't happen. I can't just do it in one class. I want to be able to go over this in full, and exactly why we're doing this. Your plan can, like I was saying, the emotional trading. Not trading when you're tired can be part of your plans. Like maybe you plan your sleep. And, you're trading around your sleep, or vice versa. That way you don't get into Isaiah by accident. Trying to think of another good question. Jesus Christ, the ESTM went up 21%. I did not even look at that. Okay, cool. What sector is VSTM? And who alerted it? So this is a three-part question. You need to answer all three parts in order to get this correct. Who alerted VSTM? What kind of play is it based off of who alerted it, whether it be long or short? And what's the sector? This will be the last question. Then we'll be all heading off to sleep because we gotta get up in the morning. I'm bleeding all over my desk. I forgot I took a pretty decent fall on my bike today. That was fun. Take care, Matster. Take care, Brent. And the homework will be coming out as well. The homework's going to be a big one because it'll be a little bit about creating your own plan. Or just, I'll be asking some questions about the plans and what you might want to implement and why you think you're going to implement this plan. Like, I'll be asking what is a trading ratio, for instance, and what do you think that you might want to use and why. And other stuff like that. Just, it's kind of like it'll be like the homework will actually be you creating a trading plan. The inside view. Yeah, I think I might keep this open for the free members for the next week. Just going over some of this stuff. And then once we get into the more, like next week is candle patterns, and then we'll be doing like day trades and stuff like that. That'll probably only be for just the new members program. Take care, Popeye. Oh, I forgot, what was my question? Oh yeah, so Healthcare Lee Long. Pookie's again. Pookie's revenge again. Healthcare Lee. Health Lee. Lee Long Biotech. Clint Parker. Pookie's Revenge did get that first. We gotta put like a what's it called? Like in the Discord when they have like a time limit or like a limited amount of posts you can do in like in a certain time. You gotta put that on you, Pookie, so you don't get all the answers correct. Or slow-mo, that's what it's called. 126 words per minute. Damn, that's really good. Maybe you're a fast thinker as opposed to a fast thinker. Getting those words in so fast. Okay. Well, I hope that helped everyone. Like I said, we'll be doing some homework, which will actually be helping you create a plan and kind of like kind of like challenging you to figure out why you're going to be creating the plan the way you will. But yeah, so I hope that those of you who aren't currently with us in the premium membership, in the new members program, hope that you join us soon. You can find us at the link in the bottom right-hand screen. I guess this is my bottom right. But yeah, it's going to be facebook.com/btpenny just for our Facebook. But the Discord, which you definitely want to check out if you aren't already in our free Discord, is discord.gg/btpenny. And if you aren't in our premium alert service, definitely check it out. At least just ask about it. If you might not have the money for it, like I said, don't trade with money that you can't afford to lose. Don't put money. Although this isn't, even if you're not trading your first month, if you have some money that you can put, you can throw, to the stock market or whatever. At the very least, look at this as like a learning experience, because that's what we're trying to do is to get people over that hump. Like a lot of traders take months to a year before becoming a profitable, successful trader, and we're trying to help you make that a little bit less of a time, a little bit less losses in that time. But yeah, no rush, no if you can't join, you can't join, but definitely join us in our free Discord so you can at least chat with us. I'll be leaving these courses open to a free Discord for the next week, so hopefully you'll be able to join us for this next week. It's going to be at 9:30 p.m. Eastern Time Zone every night. So that's going to be next. Tomorrow's going to be 9:30 p.m. Eastern Time Zone will be our next one. So definitely check us out in our free Discord, in our premium Discord, in our new members program. Shout out to Pookie's Revenge, Bodie. We got Playlets, Scott Carpenter, got Kev Cave. Shout out to Marcus Hall, which is what is it? Clippers, right? Clippers in our Discord. We got Matster was in the house. Actual Trash Plays made some raffle tickets. Kev Cave, Brad, Burmac. Shout out to Burmac Lad or Lauren. Shout out to Lauren. And thanks to everyone for hanging out to the end. I know we had like around 70 viewers at the top of the stream, and I appreciate all of you and everyone who, even if you're not watching live, I appreciate you checking, hanging out and coming in after the stream ends, and checking out throughout the week. If you're working or whatever it is, this will be on YouTube for all of you. I definitely appreciate all of you, the views and all that good stuff. Definitely subscribe if you want to. If you want to get an update whenever these do happen. I might start doing some like random throughout the day videos or streams, just going over some random stuff. Like Playlets was asking, I'll do one about what I put in the NutriBullet and for the night and for the morning and how that all works. So definitely get a subscribe going on so that you can keep up to date. Shout out to Rise Johnson, Kev Cave once again. Heal those wounds, yeah. Yeah, it happens to the best of us. I can't see it, but anyway. So join me in the free Discord if that's what you want to just hang out and just check out how we all work. Hang out there. If you want to join our premium alerts and get into some of those alerts you saw on the screen earlier, check us out there. That's going to be at the right there, the discord.gg/btpenny. So join me. What the Duck, and feel free to ask any questions. You can message me whenever you guys need to. But yeah, join me so that you can, as you see, hashtag make some bread. All right, thank you for joining, everyone. Duck, are you drinking a smoothie out of a snifter? You gotta keep it classy, Bodie. That's hilarious. I am drinking a smoothie out of a snifter. No cooking on a reaction channel. Green days ahead. Pookie's Revenge.